Well, away from gas and the saga of Opes Prime, it seems, is far from over. With 2 directors in jail and 1 acquitted over the collapse of the stockbroking firm, which saw clients lose hundreds of millions of dollars, the ABC has learnt lawyers are now targeting the advisors who encourage people to invest in Opes Prime. Emily Stewart has the story.
After deliberating for 24 hours, not guilty was the verdict.
I'm just very grateful to the jury and thankful it's all over.
But the fallout from Opes Prime isn't over yet. Lawyers are now going after the advisors that recommended investment in the company.
Most of the brokers didn't read the documents and they didn't understand it. So those advisors are recommending it as if it's a margin lending product, not realising that the shares will transfer. Yeah. So if you look at the documentation, no one's alerted to that fact until too late.
And it was too late by March 2008, when Opes Prime collapsed, owing $630 million. More than 1,200 investors were burnt. David Regensperger was one of them. He lost his life savings in what he thought was a sure thing.
So we'd sold a house and parked the money in blue chip shares, BHP, the banks, and it would just happen to be through Opes Prime. We lost everything just about.
For the directors, the good times flowed. Fast cars and luxury houses were put through the business. Money flowed between holding companies to cover margin calls. But that all came crashing down when one major lender recalled their shares.
Investors are becoming increasingly worried by the volatile market.
The collapse sent shockwaves across the market when secured creditors, including the ANZ Bank, moved to recover their money by selling shares that Opes clients had placed with a stockbroker. A quarter of companies listed on the stock exchange were caught up in the bloodbath.
Prior to the collapse, the regulation of this sort of lending was a hodgepodge of state-based regulation.
Last week, a jury found Julian Smith had no knowledge of the impending disaster when he signed off on a $95 million loan from the ANZ Bank. Just 3 business days later, the company went into administration, owing hundreds of millions. Compensation is still trickling in. Investors have now retrieved 40 cents in the dollar.
I think everyone has learnt the lessons from Opes Prime, particularly ANZ Bank with its massive loan.
In a show of remarkable resilience, David Regensperger says he holds no grudges.
There was a person that had committed suicide over this, and it's not worth it. You've got to move on.
He now sees the collapse as a turning point.
6 months after Opes happened, you sort of went through all the sort of dark period, I guess, and just the rebuilding phase, and I decided to step into the abyss, as I call it, and start a business.
But he hasn't invested in shares since.
I guess what it highlights is that any product that's structured or manufactured or engineered in that way should send signals to investors, particularly retail investors, and they should steer clear of it.
Slater & Gordon has already pursued 5 advisors, including Bell Potter, Southern Cross Equities and Euros Limited. All but one settled the multi-million-dollar claims out of court. Lawyers will take action against 2 other brokers in the coming weeks.